SVB failed about a week ago. So you might wonder, what happens to all the interested parties now? We have depositors who had their money with SVB and were freaking out. We have shareholders who own stock in SVB. And we have lenders, we have creditors, people who own bonds of SVB. So let's talk about each of these parties. Well, the good news is depositors have gotten their money back. The FDIC stepped in and said, we will guarantee both your insured and uninsured deposits. You might say, well, how does the FDIC and the U.S. government have the money to do that? Well, they can pay the money out now and worry about later where it's going to come from. Though all of those troubled assets that had lost value, that's not a concern for the U.S. government. They can hold those assets till maturity. U.S. government has plenty of cash, so there's no concern. They can pay out the funds now. How about shareholders? Not looking good for them. The stock halted last week on Thursday at about 106. At some point, it will resume trading, even if the company files for bankruptcy, the holding co. The stock could resume trading. It could be trading for $30. It could be trading for $20. It could be trading for a couple bucks. It could be trading for a couple pennies. So shareholders are likely to get wiped out. The interesting parties at this point will be the creditors, those who own bonds. And in fact, a lot of hedge funds have been buying bonds of SVB in recent days because when the bank failed, the bonds were down to about 30% or 30 cents on the dollar, 30% of par. So if you think the company's going to file for bankruptcy and you become a creditor, well, as the holding company liquidates its assets, that money first will go to the government to pay depositors, and then shortly after, it'll go to creditors. And you might say, well, what assets does SVB have? Well, the holding company has several subsidiaries beyond the bank. There's a broker-dealer that does investment banking. There's a private bank that does wealth management. Some estimates have these subsidiaries being worth $10 billion or more. So those subsidiaries can be sold, and the cash from the proceeds, again, first will go to the government to pay depositors and then other administrative claims. And then at that point, bondholders could recover 50 cents on the dollar, 60 cents on the dollar. And if you bought a bond for 30 cents on the dollar and it's cashed out at 60 cents, you make some money. So it'll be interesting to see what happens as the situation develops.